Hello everyone, this is my first video of 2016. I'll take you through Bank Nifty Futures price action analysis of 15 January 2016, which is Friday, last Friday. The price opened within yesterday's range. It is mainly caught up between this trading range that you see here between these two lines. I drew these lines mainly to get an idea about these zones where the price will find support or resistance. Okay, yesterday's low is somewhere down and high is also not visible in this chart at this point of time because price opened within a range of yesterday. Price, the first part that you see here, okay, when actually the price started coming in, it was not like this. Okay, it was the bar high was somewhere here, and the bottom tail was there, so it was basically a bearish pressure being visible on this bar. Bulls bought the close of this bar one. This is the first bar of the day, and kept pushing prices. So you can see that there were consecutive bull bars, 2, 3, 4 bull bars. And as I mentioned, there was a high of the bar one somewhere around here, wherein these bulls who sold the close of bar 1 betting on price fall continuation, they scale in here. But look at this bullish order flow and the strength of the move, closes of these bars, gap between this high and this low, right? So clearly bullish strength being exhibited that uh, had a chance of at least a second leg or continuation up, right? So bears knew this. What happened here is that bulls kept on buying. After this bar, they knew that possibly there's at least some chance that bulls will get a good up move. So they bought the close of this bar, they bought the close of this bar, right? At least about this high of the bar one area. And then once they saw this tail, some bulls, those who bought late, try to scale in and get out at break even, of course, or small profit. And these bears who sold the close of this bar here were actually caught up, but they were ready to wait till this bar one's high, wherein they scaled in to at least see an exit at a break even. Okay, so you see bearish pressure being applied one more time on bar 6, and then you see this bar, which is basically a breakdown below EMA. So price went below EMA, came back up all the way, and then went down below EMA one more time. Now the trade that I have identified here is not a typical that being used to, because it's a trade on bearish bar, long trade on a bearish bar. Why this trade was uh, a good one? Because of this strength of the bullish up move, bears were going to give up somewhere around this break-even zone. Like this is where they initiated, which is uh, at this level, and they scaled in here. So at break even they give up. So if bulls apply the pressure immediately, if I see any lack of momentum, I was not going to keep the order pending there. I need to see an immediate action on this bar, which is, I mean, after the bar broke below EMA and managed to close below it, the bulls are getting into action and they push the prices up. That's where this long trade comes into picture. That is, bears gave up and bulls are getting in. Let's say you are not able to buy above this bar's high, but once you see this bar, there is at least 60% certainty that price will continue to get an extension of this move, right? And that's what exactly happened. You could go long above this bar's high and get a 20-point move. So you go in with a risk of 7 points and target 20 points, right? This high is 589.80, Right? So you definitely got your 20 points or even 30 points more. About this bar's high 604, you again got 30 points more. So you could go for 7-point risk and 20 points target, right? So either of these long trades you could have taken. What you see next is that the bar after this long on this bar, the follow through is weak, and then this is a failure. That's momentum is slowing down, right? Strong bear bar, which is a failure about this bar's high, and then you see that uh, of course this tail is something that you see afterwards. When I did the backfill, it was not there in the beginning of at least when I was actually trading, right? So from that perspective, it is a failure of the breakout over this pivot high or swing high. And then this bar came wherein bulls scaled in below this bar. Those who bought the high of this bar, right? They were scaling in lower and basically pushed the prices up. The support was at the EMA as well as below this bar. Gap up. Sorry, this is a clear gap down. So those bears who sold on this bar and sold a close of this bar, they were scaling it. You can see that this close is there at 622 and this open is 611, 10 points or 11 points gap, big one. So bears were clearly applying the pressure, right? But bulls still held the ground and it pushed the prices up, and some managed to get out break on those who were trapped. And what you see next here is that there was a fight between bulls and bears, and uh, that was finally won by bears. Right? This was the final attempt by bulls wherein they try to get out of this zone, but it is a lot of sideways move with tails, and bulls did not manage to get out of this zone successfully. Once the bears sold the close of this bar, those bulls were trapped, right? And what they did is bearish pressure was so strong that it managed to close below EMA. This was an attempt to scale in, and those bulls who were long or trapped, they try to get out at break even, right? So below this bar is where I entered another short, thinking that this is possibly now a strong bearish continuation, right? I had a room till at least this bar's low because this is where some of the bulls will scale in, or at least they will try to get out at break even, right? Strong entry bar for the short. What happened? This is the tail that you see on this bar 21, which is bulls scaled in and they were supporting this zone or level of the price. So I moved the stop to break even and got stopped out at the break even price, right? And some of the bulls who scaled in here, they pushed the prices up, right? And they managed to get past EMA, close about the high of this bar, bearish bar, then another bullish bar, and some of the bulls who were caught up in this zone, they scaled in here, they got out right here at break even or maybe small profit. Again, bears applied the pressure. Those bears who sold the close of this bar applied the pressure and they managed to get a close below EMA, below this bar and EMA. So those bulls who had bought close at this bar and this bar, thinking that the bulls are going to get the continuation, they try to scale in. They bought the close of this bar. That's where you see a gap up. So bulls were strong. But what you see here, it's a weak attempt by bulls to hold the ground. You see a tail, that means even though bulls were applying the pressure, it was not enough. So they gave up. So you should go short below bar 25. Good strong entry bar closing at its low. That's exactly what we want. Then what do you see next? This strong bull bar. Some of the bulls are scaling below this bar's low, which is bar 22 low. They tried, but and it was a very good close at the high of the bar. What do you see next? Bears were ready. They sold the close of this bar. You see a gap. This closes 595 and this open is 593.50. So the gap. So bears applied the pressure, right? So the bulls will give up because of this pressure that you see here, right? Those bulls were trapped, they gave in this bar, or finally they scaled in some more and gave up, right? Once the bears gave up, sorry, the bulls gave up, that's why you see this move down. Of course, it was not a convincing move because you see tails, not a good follow through of the bar, so the momentum was not that strong as expected. Then you see some more support coming in around this zone here, and then price kept pushing up. Bars made higher lows, at least every single bar. An interesting action developed here, right? What you see here is once the price failed to cross EMA at least 3 times, it managed on this bar. Bears applied the pressure again, they tried to scale in. It has a very strong close below EMA, so some bears sold the close of this bar, but then bulls scaled in below this bar's low, and they did not allow price uh, to be a weak close. It was a strong close above EMA. So these bears were disappointed. So they scaled in above bar 38 high, and they gave up at break even. So which basically means they were able to get a part profit on their scaling, and original entry was a break even. Okay, some got out on this bar 40, nice strong looking bull bar. So you knew that bears had given up, so which is a good chance for bulls to get in. That's when the long comes into picture. High is 590, and you got basically you need 7 points risk and 10 points target, which is what you got here, right? It is even 30 points target could have been made, but it depends on slippages and all that. So 20 points was a safe target here, right? So that's it as far as around 1 hours of trading is concerned. Actually less than that, right? 1 or 2, either of these trades, so 20 points. Then this was a break even, this was another 20 points trade, and this was another 20 points trade. At least 3 20 points trade that were possible in this price action, which was actually just a up down up down flip-flop trading range price action caught up in yesterday's range. Actually these two lines that I have drawn here, it was a zone in which the price was caught up, right? But if you follow bar by bar analysis and what's going on, you're focused and disciplined to take action whenever you see the trades, and you're not cherry picking. 1 minute time frame is actually fast, so you need to be really nimble to take decisions and execute on your plan. But if you can do it well, you will really be successful and consistently profitable. Thanks for watching. I hope it helped.